Brexit again. I know that some of you might say, man, Andile is obsessed with this Brexit. This is probably one of the biggest things that have happened in our working lives when it comes to global economic factors. And I've got on the line the chief executive of Century 21. You know them, they're in the property space, and his name is Nicolaides. And we're going to talk about the potential impact of this Brexit on the South African property industry. Harry, you well?
Hi, thank you, Andile. I'm well.
Have you recovered from this thing, man? I'm not okay yet. You know, I'm still too new for me. It's too soon.
You know, you're so right. You know, before the weekend, I was looking forward to all the soccer in Europe, and we all got hit by this Brexit story.
You know? Okay, let's talk about impact on property. First, let's talk currency, because obviously the first thing that happened is that, you know, the pound went the other way. That affected all the other developing markets, and that obviously led to a sharp weakening of the rand against the US dollar. Yeah. The impact of that?
In fact, on the day of the Brexit exit, we experienced almost around about 9% drop of the value of the rand, you know, compared to the dollar and the euro. And thankfully, it has recovered a bit. You know, it's sitting around 6 and a 5% drop from Friday's level. So the net effect, it still is a drop on the value of the rand.
People are worried about borrowing costs. People are worried that this might be sending the wrong signals to the Reserve Bank in Pretoria.
You know, the fundamentals of the property industry have not changed, and they won't change pre-Brexit and post-Brexit. So, and even, you know, some people are saying there are British nationals who own property in South Africa, and they're now going to decide if they want to buy or sell. But you know, they're such a small, tiny minority with respect to the total market in South Africa. So that's completely insignificant. But what affects us is the rand's volatility, because unfortunately we are a country that borrows heavily externally, and we also import goods and services internationally, and we pay for these back in dollars and euros and yen. So a depreciation of the rand has got an effect in our ability to pay back these loans, and that makes us a little bit more riskier to lenders, who then go and push up the interest rates. And unfortunately, it filters down to Joe Soap on the street, you and I, and we land up with a higher lending rate for our bonds, you know, via the prime interest rate. So it may make property a little bit more unaffordable for first-time buyers and for people who are thinking of selling to upgrade. It may have a negative impact on that.
Let's talk about that deposit, or that own contribution, or that equity element when I buy a house. You know, it seems like a long time ago when you could buy a house, the thing is fully bonded, and they even pay your transfer fees. If this continues, all this uncertainty, and indeed the Reserve Bank says, look, yes, we want to stimulate the economy, but, you know, with where the rand dollar is going, of course, they won't say that. They'll tell you about inflation. But we all know that it has, it has an impact on interest rates, and it has an impact on the US dollar exchange rate, or rather just the rand itself. What then happens when banks look at this? Are they likely to even be more tighter?
They will, you know, Andile. Unfortunately, look, the bottom line is affordability. Okay, so we take a bond. Can we afford it? Now, with a higher interest rate, obviously our monthly repayments are going to be higher, and can we afford it? I mean, are our salaries probably not increasing at the same rate? So the banks look at affordability, and obviously an interest rate hike means your mortgage payments or your bond payments are going to be higher, and then they look at, can you afford this? So an increase in the prime lending rate impacts affordability calculations, and this does put a damper on the property market. Any interest rate hike at any time will always impact the property market. And that's an unfortunate consequence. And remember, our rand volatility here is also governed by what's happening here locally, like political sentiment, political instability, as we've seen with the recent riots, the drought. The drought has got a major impact on food inflation. Again, all these things impact on the affordability. Now, Brexit itself is not going to be a cause of interest rate hikes, but it may add to the call to raise interest rates.
So what do? I own a home. I had all these plans maybe of buying a new home. Do I stay tight? Do I stay put?
No, you know what? You need to beg, borrow,
Not steal.
Because not steal. Beg, borrow, and save. Save as much as you can, because ultimately, at the end of the day, and in the long term, property is always on an upward trend, and there's many arguments, is property a good investment or not, but over the long term, 5 years, 10 years, 15, 20 years down the line, a property investment is a safe bet, and property prices will increase. The rates of increase may be subject to what's happening internationally and locally, but in the long term, it's always on an upward trend. So obviously, from my perspective, property is a good thing to invest in. A primary residence is a must for most people, and we should do whatever it takes to in fact own a property and use it as a base to do whatever else we have to do in life.
Harry, thank you so much for your time, my good man. Thank you for pitching in on this one.
Fantastic. Thank you.
Appreciate it. CEO of Century 21, Harry Nicolaides, talking about what Brexit might mean to you and I as property owners or even aspirant property owners. On the other side of this short break, I will be talking Volkswagen. They have been given a big fine, 14